This is John Paulamy of the Actionable Intelligence Alert. Today is Sunday, April 22nd, 2018. And this week I just wanted to review the current situation in oil and uranium and my uh, ideas on some things that are happening recently that may affect these markets. So let's jump right into it. I get a lot of emails and comments in the videos regarding what uranium stock should I buy or how should I play the uranium business if we think it's going to take off. And so I was perusing the internet this week and saw this chart that Catoosa Research put up in one of their solicitations. And basically, it's a chart of Cameco that goes back to 2000 and goes through 2007 and basically encompasses the previous bull market in uranium. Now, Cameco, of course, is the 800-pound gorilla in the room when it comes to uranium, though Cameco, along with Kazatomprom, are the two largest uranium producers in the world. So I think if you are a novice investor or beginning speculator and you're just getting into this, it takes a lot of research and time to really filter through all the little juniors that are out there. And that's just in Canada and the United States. There's a whole bunch of other small companies uh, down in Australia also that have potential, but they're extremely risky. As I've said before, when you are playing this uranium market, you have to be cognizant of the fact that you're dealing with small companies that have no production. That means they have no revenue coming in. Okay? So they are constantly in cash burn mode. They're constantly spending money for secretaries, rent, keep the lights on, field trips, going to conferences. If they're drilling to expand their resource, that's a big expenditure. So where are they getting the money? Well, they are having to sell shares into the market to get money to do these things, to keep the lights on. So if you're selling shares when the price of your stock is at an all-time low, you're creating more and more shares just to get a very little bit of money, and that's called dilution, and that's not good. So you really have to be cognizant that you don't get blown out on a share count over the next 18 months to 2 years, waiting for this uranium market to turn around and for these stocks to take off. So I don't think there's anything wrong with just buying Cameco, for example. It's extremely cheap right now, and you saw what it did during the last bull market in uranium. It went up 20 times. So I don't know, that's an excellent thing to get into. The other thing you can buy is you can buy physical uranium. If uranium's selling at $20 a pound, $22 a pound, there's a company that trades in Canada and on the pink sheets in the U.S. It's called Uranium Participation Corporation. Basically, they go out and they buy physical yellow cake and they store it. Actually, Denison Mines administrates this for it and takes care of all the storage and administrates this program for them. But what they do is they issue shares over time, and then they go and buy physical yellow cake and just sit on it. That's another thing you could do. Okay, you're not going to get a 10,000% return or a 1,000% return, but you can start moving money into things like Cameco and Uranium Participation Corporation. And I hold shares in those two things. But to caution people again, you really need to pay attention with these juniors because, like I said before, let me reiterate this for the 10th time, they have no revenue for the most part. They are burning cash. They are burning matches. Okay? It's like holding a burning match. If you hold it too long, it's going to burn your fingers. So we don't know the exact time that the uranium market's going to turn around and the price is going to go up. You have no clue. And in the meantime, these companies are going to keep telling their story and keep selling shares to keep the lights on. And next thing you know, you go from 50 million shares to 100 million shares to 200 million shares, and what have you got? So be cognizant of that. And if you want to play in this market and start accumulating a position, I mean, Cameco is the go-to company, and they're not going to dilute their shareholdings. They have sufficient capital. They have access to banks. They have sufficient resources. They're the low-cost producer in the world. They're not going anywhere. This should be a core position for any uranium portfolio. And then that gives you time to go out and start looking at some of the juniors and which ones are affiliated with good sponsors. That's the reason why I like Fission Uranium. That's one of the companies I like. It's a junior. I mean, they have a big Chinese partner. That's one of the Chinese nuclear state companies. Uh, they're not going to have to. They're going to, if they need capital, they'll get it at a reasonable cost. So just be cognizant of that, guys, because I want you to do. Where this thing's going to go, we want everybody to do well. We don't want people getting blown out and saying, "Well, man, they had a uranium bull market, and I didn't make any money during it." Just pay attention to what you're doing, and that this is what goes on. And believe me, all these executives in these companies, they're going to tell the story. They're going to talk just like I do about how the market's going to take off, and it's going to be unicorns and skittles. And that's all designed to get you to buy more shares so they can keep the lights on. So be cognizant of that. Nothing wrong with just buying a company like Cameco, the 800-pound gorilla. It's going to go up in value when uranium goes up. Some more nuclear news this week. The Genkai 4 reactor in Japan commenced fuel loading. It'll restart in late May. This will now be the 9th Japanese reactor. I mean, I've actually seen some people write me emails and say, that uranium's not going anywhere. It's in decline. It's like, do they not watch the news? The Japanese are restarting the reactors in a methodical way. It's happening. It's going to continue to happen. And that was one of the biggest stumbling blocks to a rising uranium price, because as these reactors come back online, obviously the Japanese aren't going to be dumping uranium inventories into the market. The other news was, the reason I put this up here is because it's kind of interesting, but the governor of Niigata Prefecture in Japan resigned due to a sex scandal, and it's important because he had been holding up the review of restarts for Tokyo Electric, their 7-reactor complex in central Japan, which is one of the largest, if not the largest, nuclear complex in the entire world. So there's no guarantee that the replacement governor that comes in will be an advocate for restarting this complex, but the Abe regime at the federal level is definitely pro-nuclear, wants reactors restarted. So I don't know if there's going to be another election or if there's going to be an appointment put in there. I don't know how that's going to play out, but it's just another tidbit of information to keep track of, because I think out of the 7 reactors, 2 are ready to go right now, and the rest are still in review. But we're seeing that momentum in Japan. That big stumbling block to a large, or that bear case story, which was the lack of Japanese restarts, is crumbling as we speak, and that's the major thing to take away from this. Now, the other thing that really wasn't reported to heavily this week, but it's very important and I think needs to be watched, is the continued antagonism towards Russia by the United States and Western Europe, especially with this made-up gas attack in Syria, and then us sending missiles in there. So now there's new sanctions on, the United States has put new sanctions on various Russian companies, including Rusal. As a matter of fact, State Department issued a directive that any American that is doing business with them is to cease doing that and cannot do business with Rusal. And if you hold Rusal stock or bonds, you have to sell them by like the end of May. And this has caused the bonds of Rusal to collapse in price, basically. And Rusal is just the Russian aluminum conglomerate. But, we continue to push the Russians. We continue to demonize them. This whole trumped up, for lack of a pun here, of this whole Russia thing is totally fallen apart. But yet the president feels he's kind of like that. If you read his books or if you kind of study him, he's a very egocentric, egomaniacal person. And he doesn't like the fact that he is being portrayed as a Russian stooge or puppet. So that's why he, launched this little cruise missile attack at buildings that didn't matter. Really wasn't a big deal over there. There was no gas attack, guys. Okay, there's people on the ground. You can go on the internet. OAN News, for example, right here from the U.S., sent a correspondent. He's got a video up. He talked to everybody there, all the doctors. There's nobody even died that day in that city. All they had people coming in there because there was a dust storm. They were having respiratory issues. That was the big deal for that particular day. The whole thing was made up. It's propaganda. It's fake news to demonize the Russians. Okay, I'm not going to get into. Maybe I'll do a video of geopolitical stuff. But what I'm trying to get to here is the Russians are being pushed constantly. So it came up, there's some nationalist elements in the Russian Duma, which is their parliament, and they're considering suspension of nuclear exports to the U.S. by Rosatom. And I think this is just amazing that the United States is in this situation. The United States gets 20% of its electricity from nuclear power. So 1 out of 5 homes and businesses in this country is powered by nuclear power. The United States imports 95% of its nuclear fuel. 95% of the fuel that's used in our reactors that supply 20% of our electricity is imported. Half of that comes from Russia or Russian-controlled or influenced nations like Kazakhstan. Hello, Kazatomprom. So now we have a situation where we continue to antagonize the Russians while we're dependent on them for nuclear fuel that supplies 20% of our power needs in the U.S. I mean, first of all, how do we get in this situation? Because of the lack of leadership, the flunkies and losers that have been in power for the last 25, 30 years in this country. That's one reason. And number two, I mean, it's just a lack of planning and this focus on this 4-year election cycle. And it's like a college football game, my team against your team. Okay, who's going to win? And in the meantime, we got a serious situation going on here where we're antagonizing a trading partner that supplies 20% of or 50% of our nuclear fuel that supplies 20% of electricity. Now, I'm not saying that the Russians are going to cut it off, but they're considering it. You know, this is how things are done. And if we continue to play this game of Escalante with them, a whole bunch of bad things could happen. So all we're really doing here, folks, in the long run is creating a multipolar world, going back to like Cold War footing, where you have all these strong men around the world, and you're forcing Russia into the arms of China, who's the emerging power on one belt, one road. That's all we're doing, and it's just not going to be positive long term. I think from a speculation and investing point of view, it'll make inflation go higher and I think commodities will go higher over time. This will help fuel that because there's going to be all kinds of trade restraints and trade back tit for tat. So it's something to watch. It hasn't been passed by the Russian Duma yet, but it needs to be watched because if they cut us off, I mean, it's not like they can just ramp up the United States. You know, back in the early 80s, the United States basically supplied all of its own nuclear fuel. 40 to 50 million pounds a year was produced in the United States, and last year was like 1.5 million. There's like 480 or 500 people working in the industry, nuclear mining industry, uranium mining industry in the U.S. It's a joke. It doesn't exist. You can't just flip the switch and turn it back on. It would take years, take a decade to get it back. And in the meantime, what do you do as the reactors run through their, year or 2-year fuel supply? You'd be in big trouble. So it's something to watch. Okay, the oil story is still on track. I'm watching a lot of videos now. You can go and do some YouTube searches, but you're starting to see the sentiment change towards oil. The lower for longer idea on oil prices and that how the shale was going to keep prices low for forever, that idea is dissipating like a fart in the wind now. That's gone away. And now we're starting to talk about, yes, well, things that we've been talking about. I'm hearing people from Morgan Stanley, Bank of America, all these big analysts are now talking about what we've been talking about for over a year. And that is that lack of investment in a depleting industry like oil extraction is going to lead to higher prices, especially considering the fact that demand doesn't seem to be slowing down. It's actually increasing. And now, as I've said, we're coming out of the refinery turnaround season. We're coming out of the winter into the spring, into the peak gasoline usage of for the United States. And you see the president now, he's out there trying to jawbone this. It's unacceptable that the oil price is going up. Well, what is he? He's like King Canute. He's going to walk down to the shore and tell the tide not to come in. It's not going to happen. Oil's going to $80 and $100 a barrel in the next year. And ain't nothing anybody can do about it. That's just going to happen. And he doesn't like it because it's going to come in an election. It's going to be $3 gas and $4 gasoline in California and $3 gasoline around the rest of the United States. It's coming. So get ready for it. For us as speculators and investors, we're going to make a ton of money on it. There's nothing can be done about it at this point. Okay, it's the air gap that was created when the price collapsed with lack of investment over the last 2 or 3 years is now going to hit us in the next 2 or 3 years, and the price is going higher. And like I said, You talk about electrification of cars. And all, this is another fart in the wind. It's going to happen slowly over time. We still don't know how quickly it's going to happen, or how much market share these cars and vehicles are going to get. That's a whole nother resource issue that's not discussed. So oil's going to be here for a lot longer than people think, and we are going to at least be going through this next oil cycle, upcycle. And I suggest you get positioned if you're not positioned. We're starting to see now a turn in the oil services stocks. It was big. We talked about it last week and the week before. The breakout has happened. The stocks moved really higher. They really blew higher. A lot of them are oversold now, but that's what you're going to see. You're going to see, you should start seeing advances in these stocks over time, and we should start seeing that news flow and sentiment starting to change. That's what we talked about. We have to see things go from bad to less bad, and then we start seeing the sentiment change, and then it goes from lower, from longer to well, now the range is going to be 60 to 80. That's what you hear the analysts saying, the conventional analysts. Well, expect a range between 60 and 80, but it'll stay in that band. We don't expect to go higher. When it blows, we're already at close to 70. When it blows through 80 and starts heading towards 100 over the next year, what's going to be the excuse then? It'll eventually morph into higher prices for longer. They'll get there, but we need to be ahead of that curve. And we, as speculators and investors, that's how we make our money, is by being ahead of the curve and being ahead of the conventional wisdom, which 9 times or 99 times or 999 times out of 1,000 is wrong. So here we go again. We're seeing it in real time. So I encourage you to stick with that story. If you haven't taken any positions in some of the oil stocks or service stocks where I think there's a lot of leverage, I think it's time to get on board. I would wait for some pullbacks because, like I said, we've had pretty good moves in the last week or two in some of these stocks. But I would be definitely thinking the price is going higher, and it's going to drag these oil services stocks up there with them. So that's it for this week, guys. Please subscribe if you're not a subscriber. Share these videos. Feel free to ask questions and make comments. I look at the ball and I try to answer them the best I can. And I appreciate you guys continue to view the videos, and we'll talk to you next week. Thanks.